Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures shown on the screen now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing can be found on Crescat's YouTube channel and on our website. Crescat's live market call is about sharing timely macro and newsworthy geologic updates on Crescat's activist metals positions, both positive and negative news across our holdings as it arises. The discussion and topics will not cover all aspects that an investor should consider when deciding whether or not to invest in any of the securities that are part of our presentation. The type of investments that we discuss can carry significant risks, and whether or not to invest should be a determination made with complete investor suitability in mind and in connection with a professional advisor. The topics and themes we will discuss are the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our strategy in creating new economic metal deposits in viable mining jurisdictions around the world. The forward-looking business opportunities we discuss may not come to fruition or may not have a significant impact to the value of the security. These presentations should not, under any circumstances, be considered investment advice or an offer of investment advice or services. Crescat's managed funds accept only accredited investors, and this presentation has generally been put together with that level of audience sophistication in mind. Any securities discussed do not represent any full portfolio and may only represent a small percentage of any strategy's holdings. These securities may or may not be held in any Crescat managed portfolio. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can follow Crescat Capital on Twitter/X for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to Merrick. His contact information is on the screen now and can also be found on our website at crescat.net. So let's get started. We have all three of us here today, and I'm going to keep mine relatively short so we can make sure we leave plenty of time for Tavi and for Quinton. And so let's get started. This was posted on Twitter, but it comes from B of A, and it's similar to research we've shown recently regarding the valuations. Looking at an abundance of different valuation indicators for the S&P 500. This is more that they've put together than we ever put together, but I'll tell you, there's a few that we've done on our own that aren't even included on here, that like the margin adjusted PE ratio, that show that we're at historic high valuations. And this is just showing that across 19 of 20 different metrics, the S&P 500 is historically expensive on a fundamental basis. What does fundamentals mean? It means relative to underlying earnings and free cash flow or revenues and all the different financial metrics by which we can say, historically over time, is the stock market cheap or is it expensive? And using this Z-scoring methodology across these 20 different metrics, you can see that on many of these, we are more than 2 standard deviations above the mean in terms of valuations. So a Z-score above 2, which you can see off on the right, means more than 2 standard deviations above the historic mean for these valuation metrics. So what are some of the ones above 2? Trailing PE. The Shiller PE, which is the Shiller Cape ratio, 2.4 standard deviations above the mean. That margin adjusted Schiller style CAPE ratio is something that we've shown that's also way more than 2 standard deviations above the mean. Price to book values, EV to EBITDA. These are all things that we have shown as well. But it's just nice to see other, big investment firms like B of A, Merrill Lynch, highlighting these things as well to their clients. There's a lot of risk out there in the marketplace. Price to operating cash flow more than 2 standard deviations above the mean, EV to sales, and whether it's there's one unique one here. I think Tavi would appreciate something like this. The S&P 500 in WTI terms. What's WTI? That's crude oil. So S&P 500 in terms of U.S. crude oil, 2.7 standard deviations above the mean. And one that I featured a lot in some of my own research, and it's kind of the Warren Buffett indicator, but S&P 500 market cap relative to GDP, 2.9 standard deviations above the mean. Look, across a number of different valuation metrics, the S&P 500, large cap stocks, mega cap stocks are historically expensive. And this is a risk. This is a big risk. Let's go on to the next. So this is just highlighting again the chart that I've shown, looking at the Magnificent Seven mega cap tech stocks. Again, this Warren Buffett style of valuation measuring, looking at enterprise value as a percentage of GDP. The Mag 7 stocks, recently got up to 62.5% alone, just these 7 stocks of EV to GDP. I believe this is an historic bubble. How do we know? Because we look at the same metric and go on to the next slide, and we compare it to the tech bubble. A lot of people think valuations were even higher in the tech bubble. Well, not for the mega cap tech stocks. They were, these were some big internet bubble stocks. It wasn't just the .com. It was also Microsoft and Cisco and Sun Microsystems and AOL, et cetera. And when you looked at and these were big multinational companies with earnings and free cash flow. And people say, well, in the tech bubble, these companies didn't even have earnings. Well, that was some of the .coms, sure. But these were big companies with earnings. We only got to 30% of EV to GDP at the peak of the tech bubble. We are more than twice as overvalued when it comes to the top heavy mega cap tech stocks today. And I think this is a huge risk. I think this market is at risk of a significant correction. Sure, we've been saying this for a while, and we haven't had it yet. We've seen little fits and starts, but we haven't seen anything yet. I believe we're still going to see it. Let's go on to the next. So what's one of the big problems that we have today? We've been talking about this a lot. Tavi's been talking about it a lot. And it's the U.S. interest payments that are such a huge component of our deficit problem that we have here in the U.S. Deficit to GDP is close to 7% of GDP. Yes, the new Trump administration is trying to get that down, and our new Treasury Secretary, Scott Bessent, is trying to talk it down, and they have a number of policies to try to get it down over time. Whether it's the deregulation or the energy policy with increasing energy production and trying to get inflation expectations down by producing more domestic energy, or whether it's DOGE and all the spending cuts that they purport to be able to get through. Trump was just was just talking today on Bloomberg. I just saw him, and he's talking about maybe we can save $500 billion. Maybe we can save $1 trillion. Maybe $1.5 trillion. But this is a lot of talk that's out there right now, and some good ideas. But you'll note that well, first of all, this chart is just showing that right now, net interest expense, according to the Congressional Budget Office, is expected to, has just crossed the defense portion of the budget as a percentage of GDP, and it's projected to increase. It's projected to increase. This is not what what Secretary Besson and Trump are trying to tell the world as they're trying to talk down the entire curve, the entire interest rate curve, focus primarily on the 10-year. And they've had some success with 10-year yields coming down a little bit and talking it down. But we're nowhere near the level of interest rates that we need to get to where net interest outlays are not a substantial portion of our budget and our budget deficit. We don't want to be where these lines are projecting, but there's a problem because what's it really going to take to get interest rates down to a level where net interest outlays can be less than defense spending? It's going to take a lot of work, and we're simply not there yet. And you'll note that Scott Bessent recently has been making a point of saying that this is going to take time. This is going to take a lot of time for these policies to have an impact. And so what is going to happen in the short term, as it takes a lot of time for these policies to have an impact, because we have some major imbalances right now that have to be dealt with. Let's go on to the next, which may be my final slide. Or maybe I have a couple more, but look, so one of the key problems is inflation expectations, and you'll hear that even Scott Bessent and you'll hear the Trump administration start to talk about how the inflation expectations, which are still high out there and still a problem, are leftover problems from the Biden administration. And we know the Biden administration created a lot of inflation. Where during COVID they provided a tremendous amount of stimulus, printed a lot of money through the Fed, and provided fiscal stimulus at the same time as we had supply constraints and supply problems. And so, like Bessent, I think, implied recently, you increase demand, and you amidst all these supply constraints, you're going to have inflation. But he said it's going to take a long time for these imbalances to get resolved. Well, the Michigan survey came out again today, and this was from a month ago, and I apologize, I haven't updated it again today. But the mean 5 to 10-year inflation expectation among people, among the U.S. population that is surveyed, still came in way above 6% today. And in the Michigan survey, the consumer sentiment also disappointed again today, meaning that inflation is still a big problem. So how are we going to get interest rates down if inflation and inflation expectations are still a problem? And is it really viable that these three pillars of increasing energy production and deregulation and DOGE potential spending cuts are going to be the trick to get inflation? I mean, maybe over time, but but we don't have a lot of time because the deficit problem is staring us right in the face now, as that Congressional Budget Office chart showed. So do I have another slide, Trevor? Is there one more, or was this my last? Okay, well, let's just back up for 1 second so I can finish up then. So look, my contention is that we need a major stock market correction, that the Trump administration needs a major stock market correction. And I think that is the quickest path to get inflation expectations down. And I think that's still the biggest risk in the marketplace. I think this is something that is still ripe to unfold. And like you're hearing Scott Bessent, talking more about how it's going to take a lot of time and blaming the lingering inflation problems on the Biden administration, a major stock market correction early in the Trump administration could be blamed on the Biden administration for creating that bubble in the first place. And it would be, I think, the best thing for this new administration. So You know, the risks are extraordinarily high. We are positioned through put options in our global macro and long short funds. You'll note I talked about it last week, our negative downside capture ratio in the global macro fund. What that means that historically over 19 years, our global macro fund has gone up on months on average when the stock market has gone down. Why? Because we're not afraid to be different. We're not afraid to be contrarian value investors. We are actually a hedge fund. The global macro and the long short hedge funds are actually hedge funds that go short. So we have short positions where we take contrarian stance in long positions like gold and gold mining stocks. And, I think, a little bit different positioning like we have now compared to the market at large, which is overweighted in S&P 500 long strategies and passive strategy. I think it's time to be looking at something different. And that's what we offer here at Crescat. So that's it for me. I'm going to turn it over to Tavi now.
All right. Thanks, Kevin. Well, I'll try to speed up mine as well so Quinton can have the floor. But there's a few things that I think are very relevant to the discussion today on the macro side, and one of them is this been actually developing quite recently, as you can see in this chart. This is not a long-term chart. It's actually it's got about 2 years of horizon or so, a little less. But you can see a relationship between two things that I've been following very closely. I've been noticing the signs of stagflation are becoming more and more evident, and this is a good way to measure that. You're looking at the 10-year yield, the normal 10-year yield, nominal, on blue, and the white line, you're looking at the break-even rate, which is the 10-year yield as well, which is essentially the inflation expectation by the market or the CPI expectation by investors. And what you're seeing here is a divergence. Inflation has been moving higher, with commodities actually continuing to also have a resurgence of growth in prices. At the same time, economic activity is going the other way. There's many ways you can measure this. There was last week, I think, was one of the most important weeks for macro data. There was the super core index by the Fed, which the Fed has mentioned a few times already, not a few, many times in their press conference as one of the things they've been looking at, of which I disagree completely. It's an index that basically, it's one of those that basically excludes everything that matters, and the other stuff stays the same. And but even that, they're actually, if you look at the annualized number of that data last week was up about 9.5%, which is insane. 9.5% on the inflation data is, I think it speaks for itself. On the other side, another data point that came out last week that I think was very relevant is the retail data. Retail numbers, they come out on a nominal terms. In other words, they include inflation. And that number came out, again, I'm going to annualize a monthly data point, was a decline of over 10.5%. So if you add inflation, this was a very significant contraction in real terms. I find this, another clear evidence of inflation in the system as economic activity is actually falling. So stagflation, textbooks stagflation in my view. Let's go to the next chart. Next chart is showing something that I haven't seen people talk about, but that's I was curious because I've been looking at data on inflation had been rising, and it brought me to the idea, well, let me plug this into the Taylor rule model. Bloomberg actually has a whole formula where you can plug in different indices for your inflation data point that you want to use. So I use the CPI number just for the sake of this measurement. But you can look at the PCE, the core PCE, core CPI. Look, or even better if you look at commodity prices. But that was in a drop down options. But here you can see that the Taylor rule is essentially giving us a suggestions of where where interest rates should be according to this formula, and it's what I think, yeah, it's 6.5%. It's a lot higher than 4.5%. But I think what even more important here is the fact that we're seeing a divergence. The Fed is cutting rates as the Taylor rule is telling you to actually raise rates quite substantially. Actually, it's a 200 basis point spread between the two. So, what where do we know what's another observation that I think it's important here? When the Fed was raising rates back in 2021 with inflation rise and so forth, uh, Kevin was showing a chart of interest payments relative to GDP. Boy, we were at 2% at that time, about around 2%. Today, we're approaching 5%. And I know that chart was showing a 3% figure for today, but you got to do the federal and the local, right? That's the real world. The other world is just looking at the federal. The real world, you're paying both. You're paying the local and also the federal. And so in the real world, you're paying 5% of GDP. How do you raise rates today? Now, how do you take rates back to the suggestion here in this chart of 6.5%? And I just see that as completely out of the picture. And if that's the case, there's a lot of things we can extrapolate in a world where the Fed simply cannot handle or cannot raise rates or fight inflation in an environment that is also clearly happening, where inflation is resurging on many fronts. And so, this is a place where I think we've been thinking about that we're going to get into, which is suppression of rates, despite the fact that inflation could be running hotter than expected. And to me, this is again, classic stagflationary environment, but also really, really positive for hard assets. Let's go to the next chart. In the next chart, it's something I've been noticing as well, which is junk spreads. If you follow markets in the macro world for a long time, I think one of the measurements that I like to point out as something that tends to talk about a index of complacency. That's the junk market, or the junk spreads market. Basically, you're looking at how much a company with the lowest rating on the credit front can borrow money relative to how much the government can borrow money for. Remember, the government, although it has risks and all sorts of issues, it can print money, it can do whatever it wants, and so the risk for default is has to be significantly smaller than a junk company or junk rating company or rated company, and therefore, at moments in history when you see the spread between these two to fall apart, like today it's at around 2.5%. Usually are times when markets overall are putting too much complacency when it comes to risk. And so, I thought this was interesting. I was curious to see, I looked at it and I was like, wow, we've been below this 3% number for some time now. And I was curious, now, how many days have we seen this? It was exactly 100 days. So I was like, whoa, this is interesting. Well, let's look back in history and see how many times in history have we seen this. Well, just one time, and this was in May of 2007. For those who remember, that period was a time when, right after that, we did see 2 months after that, we did see a volatility event. I think that's reasonable. I think that's potentially a guide or a model for us to follow. That volatility is likely to pick up substantially in the next 2 months or so. I think that would be, very plausible. I think that complacency to this degree is unsustainable, especially when you have two things going on. You're seeing fiscal cuts, right? I mean, all fronts. Kevin was mentioning defense spending and also, clearly there's an effort towards cutting fiscal spending. I mean, fiscal spending has been the engine of growth of the U.S. economy, by the way. I mean, in my view, if there's one thing I have to point out about why we've seen the growth we've seen so far since the global financial crisis, you have to point out to the average of 8% of fiscal spending relative to GDP that we ran since 2009. And so if we're now talking about reducing that amount, that has to have an impact on growth. The second thing that's happening too is if you look at central banks globally and you look at their amounts of assets that they own on their balance sheet, that has been shrinking as well. So those are two things that are factors that tend to reduce liquidity in the markets at the same time as you have, timber ready to burn, which is junk spreads. let's go to the next chart. This is a research that I saw on Twitter that I thought was interesting, and maybe I could do it slightly differently, but they're looking at the PE ratio by Shiller, Robert Shiller, and every time we reach the above 38 level, which is very expensive. I mean, historically, we don't see markets hitting that level. In fact, throughout history, and this chart is showing 2 times. Actually, we should have. No, I think the chart should have gone back to 1929 levels, and I believe that would show similar, expensive numbers as well. But basically, what's shown here, every time we go above the 38, show me what happens. And you kind of have this period, which I guess it's similar to what Druckenmiller was talking about. When you get to the 7th inning of the market of any asset class, you can make a lot of money on the 7th to the 9th inning. And I think that we hit the 7th inning, a while back. It's not like we're hitting it now. And you can see that 7th inning in during the tech bubble was substantial growth. I mean, we saw 80% increase of the of this metric. I think it's an appreciation of the PE ratio specifically, actually performance. It's a performance of the index. So you had a performance of the index about 80% after you hit that, call it 7th inning. But we've been there already, like I said before. We've been hitting close to the 5 months, mark after the 38 level has been hit, and so this is playing out kind of like the July 2021 levels or so forth, where markets did contract quite a bit, and so I think that's actually something we should be aware of in terms of risk, and valuations do matter at some point. And I think there's perhaps too much complacency out there. Let's go to the next chart. One thing that it's a sign of maybe some rational or rationalization coming back to normal, or just common sense, as I like to say. I think the world needs a shot of common sense in this environment. I mean, I would never ever have thought that a currency called fart coin would reach a level of $2.5 billion worth of a market cap. I mean, that just seems something that was way out of my at least my estimates of what the economy would have done. And it's now down about 88%. So all fart, we're down 80, almost 90% on this. That makes sense. I also like to say that back in the tech bubble, at least, companies are being bid up at that time to, very expensive multiples. But at least they're companies. At least they're working towards a business model. And this time, we're just seeing meme coins. Like, I don't even know what this means. Like fart coin. Like what is what is a capital used for? It's a total waste of capital. Just it's ridiculous, really. So the fact that we're coming down on these things, it's important. I think it's a people are not really paying attention to these things. Palantir and some other stocks are definitely coming down. Those are like the leading, most favorite stocks from retail investors in particular. And so I think things are coming back to more of a common sense. Those are early signs of it, are very early signs, and there's a lot more to go. But I would pay attention to these things because they can have implications in the broad market as well, as we see other technology companies hitting a wall here as well. Let's go to the next chart. All right. Well, inflation is in fact moving higher. One thing that caught my attention was natural gas prices. I mean, it's been trading like, not that there isn't wars happening, but it's trading like there's a new war breaking out or something along those lines. I mean, this is literally how nat gas was trading back in June or so or May of 2022 when Russia invaded Ukraine. And I do think this has to do with some of that. I mean, of course, there's issues between Zelensky and Trump recently, and I'm sure that has been having an impact on natural gas prices. But there's also more to this. I mean, there's also the issue of electricity consumption, supposedly growing substantially because of AI, because of onshoring. Clearly there's demand for energy today, and natural gas is taking advantage of that. I find it interesting the fact that oil has not been participating on this. If you ask me, I think that oil will also participate in this on this whole upward trend of commodities and other inflationary signs. But clearly this is a very inflationary data point that we need to point out. It's about growth of the 70 or 65% since November. You annualize that number, and you're going to get a big number of growth on your bills. So this is going to hurt consumption for sure. Let's go to the next chart. One thing that's been thrown out there as that we should at least consider as an idea, that Trump has been talking about, and Musk has been talking about, has been this dividend from the Doge, efforts that we're seeing. So you're talking about $5,000 of checks that will be sent to the bottom 50% of the population. So 75 million of taxpayers would be receiving a $5,000 check in the mail. And just to me, it's just we're just taking away wasteful capital that was being spent and given in the hands of the population to spend. And I think that the ultimate, despite the fact that it's not new money coming in, it is capital that will be spent differently. And I would suspect that the bottom 50%, the way they tend to spend money, should have an impact on inflation. No, I happen to live a life where my parents had a store of selling kids' clothing back in the 90s or so. And it was kind of it wasn't a high-end store with brands, but it was kind of like middle ground of not low end either of kids clothing brands. And what we used to talk about back in those days was that our best clients at the time were actually the bottom 50%, the less privileged people in terms of capital. And the main reason for that is because their spending habits are different. There's a lot of times there's a reason why people stay on the bottom 50% is because of their spending habits. And this is not I'm not trying to poke fun or anything about people that are in the bottom 50%. I'm just making a comment about general spending behavior that we tend to see. And so I do think this is inflationary at the end of the day, and we should be paying attention to this as well. Let's go to the next chart. So now we're looking at what I also would maybe suggest as one of the most important things going on is the dollar. The dollar, the media and a lot of people have been painting the dollar with this strength that we're seeing. And it's not really the case. In fact, the dollar is falling quite substantially. If you look at a weekly chart, we're breaking some pretty significant levels recently here. It's a little bit of an older chart, but still, the dollar is literally actually lower than the level that I'm showing in this chart, of which has been kind of, remember, a lot of people are off, in terms of positions for a devaluation of the dollar. Now, a lot of people are very long the U.S. dollar versus other currencies, especially the Canadian dollar. But remember, another thing that has been happening more recently has been the rise of the Japanese yen. The Japanese yen back in August of 2024 was one of the main reasons why we saw the market having a correction. So, this again, another rebalancing happening. The BOJ is in a better position to raise rates and fight inflation than the Fed, believe it or not. And that's just because it's a function of how much you're spending to service the debt. And in Japan, they're spending 0.9% of their GDP, while in America, we're spending close to 5%. So, that's things have to be adjusted, and the currency will be adjusted accordingly, in my view. So I think there's the dollar's at a turning point. I've been saying this for a while now. Process of writing a letter, which I will discuss more some of those views. And I think this is all very, very relevant for gold, very relevant for the miners, very relevant for emerging markets. There's a lot of things that tend to be triggered by a declining dollar trend. Let's go to the nenext chart. Here's a very interesting chart. Now I'll give the credits to Andreas Steno from Steno Research. That was at least the first person I saw showing this chart. It's basically looking at the trend of the DXY index in Trump's first term and this second term. And he showed this chart at the very beginning of Trump's presidency, and I thought it deserved to be updated. So I did that, and as you can see here, we kind of peaked at this kind of almost perfectly at the same time as the prior time. or the prior term. And I think we're going a lot lower. That's my view. And I'll stick with that because of real macro constraints that will cause the dollar to fall versus other currencies. Let's go to the next chart. So now we're looking at an interesting development as well. Swiss gold exports to the U.S. surging. Wow, I mean that's a big number. We're now talking about auditing Fort Knox. I mean, there's a lot of things going on there that could be very market impactful events. I mean, what if? No, I'm not going to throw conspiracy thoughts here, but people often say that the U.S. does not have the gold that they have reported. What if they have more that they have reported? I mean, all these things are on the table, or maybe they just have what they have reported in the past, and it's going to be a nothing burger. But I'm open-minded to those conspiracies because given the world we're living in today, it wouldn't surprise me if the Fed decided to, in a hidden form, or the government purchase some gold in this environment. I think that would make sense. Or the other side of it, it wouldn't surprise me the stupidity of maybe selling some gold and not having gold in their balance sheet, of which would be a huge problem for the U.S. dollar, in my opinion. So, I think that those things are all. I've said maybe this a while back, but I think a lot of people are having a true, history lesson about gold, as especially in the last few weeks. And I actually think they're going to have a history lesson about silver in the next few months as well. Let's go to the next chart. Emerging markets, it's still some emerging markets are starting to move. Pay attention to this. I think the Brazilian real and the Russian ruble are both having their best performances relative to all currencies. Now, the ruble is a little harder to get behind, obviously, but the Brazilian real, does make sense. It's been appreciating quite significantly in this year, and will obviously have an impact in their economy, in Brazilian economy. And if you look at the link between gold and emerging markets, I think we're getting to that stage where the derivatives of gold are looking even more attractive than gold itself. What are those derivatives? Well, that's silver. That's I think that's probably the biggest derivative of gold itself. Who would have thought silver would be trading at a gold to silver ratio of 90, while gold is while trading at around $33 an ounce or so. I mean, that's extremely bullish in my view. And then you have other things like the miners, of which, if we go to the next chart, you can see the big margin that we're seeing. That gold is approaching $3,000 an ounce. And if you look at the all-sustaining cost for most mining companies, this is a median calculation across all 50 miners by market cap. So top 50 miners by market cap across the Canadian and the U.S. stock exchange. You can see that we're actually, those guys are mining at around 1,500 gold prices, while gold is approaching 3,000. It's like a double. And you may say, well, there's some other things in between. All right, throw another 300, another 400. Even if gold prices fall $500 from here, which would be a very large decline, mining companies are still printing money in this environment. So, I think that the worst is behind us for mining companies. I think this is probably the best period we've seen for producing metals, if not in history. And it's really interesting what's going on. Markets are not catching on to this yet, but in my view, especially private companies that are not seeing their shares trading on a daily basis, they're taking advantage of this. They're looking good with their margins. That's for sure. Let's go to the next chart. And lastly, if you want to go out on a good note and a positive note, let's just look at this chart for a minute. I mean, wow, this is wonderful. It's silver adjusted for money supply, and it's a double bottom. Last time we hit those bottoms, it was back in early 2000s, and that was a time when silver took off relative to money supply. If you actually step back a little bit and look at silver prices adjusted for money supply all the way to the 70s, what you're going to find at today's levels is almost 90% lower than it was back in the peak of the silver prices adjusted for money supply. That maybe give you a roadmap of the potential of what silver has ahead, in my view. That to me is asymmetry at its best And so to me, I continued. I think there are times that I've been following silver for a very long time, and I would say that there are times you want to be following even closer, and that to me is a time. And not just following. It's expressing this in the markets, in our view, at least that's what we do. And so to me, this is a time, one of those times in history that you want to be watching this extremely closely, because I think silver looks ready for an explosive move again. All right, Quinton, I think this is my last chart, so I'm going to pass it over to you.
Okay, but I want next time, Tavi, I want a chart of zinc. Okay.
Oh, I can do that. I can definitely do that.
Zinc's our new favorite metal.
Explain why.
Well, we're one of the biggest producers of zinc in the world. So I have a widget on my phone. So when I first hit the on button here, I can see the zinc price. Boom, right there.
Well, I'm not going to put you on spot, but I'm just going to ask that question because I know you know the answer. But explain to the audience, why do we need zinc? Why is zinc important?
Well, if you really want to know, you need to Google zinc and The Simpsons. Okay, and you can watch a video explaining exactly why zinc is critical.
It's actually very good.
Zinc is important. I mean, basically, zinc is one of these metals where it's really not recycled at all, which is interesting. Like copper wires can get recycled, silver obviously can get recycled, but zinc is kind of a sunk metal, meaning when you galvanize stuff, when you coat steel, say with a thin coating of zinc, it's really next to impossible to ever extract that again. So it's consumed but never recycled, hardly. But galvanizing is the main use. And if we didn't have zinc, basically everything that we have around us, anything that's made out of steel, which is pretty much all building, would come crashing down. I mean, it's just that simple. So look, after a couple of weeks, I was actually away. Let's see. I guess I was away a week ago, and you guys went ahead with the video. But after a couple of weeks, news piles up like cordwood. It's shocking. I've made a list this morning. I'm thinking, oh my goodness, I have to make a bunch of slides. So get ready, guys. It's a slog today. You're gonna have to, if you need a trade or something, you can just put your screen on black or go take a nap or something, whatever. All right, let's go to the first slide, the first update slide. Snowline had a couple of news releases over the past 2 weeks. One of these relates to the sustainability award. And I think this is a good indication Snowline's doing the right thing in the Yukon. This is basically a prize given to companies in the Yukon that demonstrate good policy, good procedures around sustainability, and they won the award. I think this is a good indication they're on the right track. It also, tells the world that they're in a good position to advance the project, hopefully to become a mine as well. All right, so congratulations on that front. But we do have some technical news as well. Go to the next slide. And you'll see here a headline talks about some drill results that have come back. A lot of people just look and they say, oh, they kind of dismiss it. Like, it's more drill results. Look, these are actually quite important results that came back here. And I'm going to show a 3D model here shortly to try to give people a little bit more flavor of what some of these holes that just came back mean. One of them, that first hole that's listed in the bullets down there below, 115, hole 115, hit a significant interval. We'll call it 100.5 meters of a little over half a gram gold. You might say, well, big whoop-de-doo. But there was an interval inside of that, a little over 2 grams. So it has kind of the same flavor, we'll say, as the main deposit. Now, this hole is quite a ways away. It's way off to the northeast of the valley area. Don't go there quite yet. Here, go back to the previous slide for just a jiffy. Okay, I'll get to that in a minute. But it's a big step out. Now, they had several others. They have one on the, you can see 117 there, the next one. This is also demonstrates continuity. again. Basically, let me just summarize it by saying this. All of the holes, more or less, that came back this round are around the margin of the deposit. And I'm going to go through them and show you where they've added tons, where they've added volume. All right, so I'll spare you reading all the bullets. Let's go to the next slide. Sorry about that. Okay, so you can see a map here. They do a great job of portraying their results. Anything that's kind of darker shaded colors are the most recent drill results. The ones that are more pastel, those are the ones that have been released already. And then there's a few drill holes in there that have little tiny yellow polka dots. And what those are drill holes that have yet to come back from Assay Lab. But they're denoting, spots where they saw visible gold. So we have lots of drill holes yet to come back, probably, 8 or 10 holes there, maybe. It's hard to see. But we have a number of holes. Notice there's some off to the north and northeast, including that 115, also this 114. And then over in the northwest, we have hole 113. It's out there in the periphery, and it's an important hole. Way down there at the bottom, we have 116, which is kind of in the south or southeast end of the system. And then 117, which kind of tests the western limit. So basically, all of these holes kind of encircle the deposit and tell us there's growth potential here. Now, that hole 115, I find that really, really interesting. Okay, that basically is pushed because they saw granite in there. They saw the same granite diorite that they see over here in the main part of the deposit. It's clear there's some form of extension going in that direction. It's either an extension or it could be a brand new system is showing up over in that area. Okay, but this is exciting stuff. Let's go to the next slide. One of the things I'm going to kind of emphasize here is we're kind of going to go back in time a little bit. Okay, we're going to talk about a couple of years ago when they first identified this Gracie target, which is due east of Valley. You can see how it's portrayed in the geophysics here. This is Z-Temp conductivity data. So basically, the blues and the greens are resistive rock, and that's reckoned to be intrusive rocks that probably formed the deposit. Therefore, the gold polka dots that you see there, which are soil results, are believed to be derived from an intrusion. Now, the bright pinks and stuff that kind of interlude between Valley and Gracie are much more conductive rocks. And what would those be in terms of geology? What might that be? Well, the country rock around these intrusions gets baked up into what we call hornfels. It's basically somewhat cooked or thermally cooked rock that's had a little bit of reaction. Like it cooked it enough that the minerals in the rock alter to something that has hornblende in it. And that's why we call it hornfels. But basically, that region in between the two proposed intrusions is reckoned to be hornfels. Now, it's not to say there couldn't be an intrusion below there. I put a little red arrow on the diagram to show approximately where hole 115 is located. And it's not a huge distance east, but it is significantly east of the core area at Valley. Why is that important? Well, maybe there's, and you can see the topography. There's actually a mountain between Valley and Gracie. That's high terrain through there as well. And you can kind of see that from the shaded topography there. Maybe there's mineralization kind of projecting underneath that hornfels. In other words, that hornfels is just kind of masking or capping what could be an even bigger system. I mean, that's really intriguing. They never quite explained Gracie in their drilling. They did hit a lot of hornfels. They hit a lot of high-grade pops and whistles, or higher grade, I should say, pops and whistles over there, but they never hit a substantial body of intrusive. Yet here we are, hole 115 is seeing a very large, basically the entire hole was in intrusive. Okay, that's intriguing. That tells us there's more intrusive likely tucked underneath this central area. Now, I'm going to go to a 3D model real quick. I'm going to, let's see. Okay, it's been a little while, but I got it all fired up here. Share screen, window, there we go, share, boom. Okay, can you guys see this?
Not yet. Yes. Now, yes.
Okay. All right. So this is basically the same image out of the news release. Shows the drill holes of interest, which are the new drill holes, I should say, which are in darker colors here. And then my technician here takes that data and he actually builds a 3D model from the drill data in the news release. Okay. So you can see underneath there, we got all the drill holes. Okay. So I'm going to turn and you can see how the terrain lies. Right, valley sits down literally in the valley. Okay, that's why it's called valley. But we have a steep hill here, and over here, hole 115 right there. Interestingly, is taking shape, telling us there's something more going on. So I'm going to turn the surface off for just a minute. Let's kind of leave 115 for just a second. I want to show you what's going on. So on the on the north side here, we have an open area. It's not hugely open, but there's nothing closing this off yet. Okay. In other words, all these drill holes right through here on the end of the sausage are still seeing gold. Like, for example, this guy right there. Okay. That means there's more tonnage likely to be added out in here. Okay. And how far, I don't know, but I think next season, I wouldn't be surprised if you see the company drill some more holes out there and maybe expand the deposit off to the northwest. Now, hole 117 is that guy right there. And it's defining an area on the west side of the deposit right here, where there's obviously a bit of incremental room for growth right through here. You know, other holes show as they get into the hornfells over here, they show things shutting off. But right through there is room for growth. I would point it out right in here. I think there's some room for growth. That's interesting. Okay, let's see. We got hole 118 right there. This is down towards the southeast end. It hit pretty good grades up high, but it also says things are still open down in this neck of the woods. So I think there's some more room for growth here. But it's holes 114, which is right here, and then 115, which is right up here, that I think are most intriguing. Okay, as I turn this around, you'll see right away. Okay, basically, there's a new or another zone of mineralization showing up here. Yeah, it's kind of low grade, but there's some higher grade within it. Notice right here, there's that 2 gram material. That's a long way, guys. That's a long way. That's 400 meters maybe from the core of the valley system here. That should not be discounted in any way, shape, or form, especially given there's a long interval of mineralization there, which is off in the background. Okay, and then we have hole 114, which is here, which basically is blue sky between there and there. So there's no drilling between those two. Now there was one hole drilled right there. I think it was back in 2021. No, it's 2022. That's hole 17. It hit a bit of gold up top, but it went out of the system. So basically, there's something sneaking through right through here. Okay. Now that's intriguing. What might there be out here? I don't know. But I think it's worth chasing. Why? Because Gracie is right there. Okay. This gold out of Gracie, although it's not big, long runs of mineralization like we see over at Valley, this cannot be discounted, guys. Okay, there's a lot of pops and whistles. Like there's a 1.44 gram. There's a 19 gram sample right there. There's a 1.8, but then right in there, there's a 6.25 and a 6 grammer hiding in plain sight. Now, and there's a 5.7 gram. If there's gold, clear the heck out here, guys. Okay, these are little probably fractures or veins that have extended off of some mothership somewhere out here. We don't know. But this is intriguing. You can see, if I zoom in a little, you can see there's Valley. Okay, there's the new zone right there. Well, what happens? There's a lot of room for potential more cow nipples tucked up, but underneath here. This is where this highly conductive area is that's interpreted to be hornfells would be right through here, and there could be other intrusives hiding in here And maybe something hiding in here is actually explaining why we have gold clear over at Gracie. Okay, so I think it's intriguing. Sometimes just a little exploration can really pay off. And if they open this thing up more, you never know. There might be another valley hiding right next to valley. That would be very exciting. Okay, now one of the things I want to do, I'm sorry I'm going to take some time here, but I'm going to turn this straight up. We're looking straight down on this thing. You can see how well this deposit is defined. Okay, that is an amazing deposit. It is so cohesive, so cohesive. The high grade is very, very consistent, very continuous across that entire area. It's one of the best behaved deposits I've ever seen in the gold industry. I think it's fantastic. Now, what I want to do is I'm going to turn this horizontal. This is going to blow your mind. Okay, I think this will get people thinking a little bit here. So we're looking at this thing horizontally. We're kind of looking off to the north-ish right now. But I'm going to take this tool right here, and I'm going to slice through this. Okay, I'm going to slice horizontally. Why am I doing this? Well, I want to take a look at. Let me make sure my slicing plane has the right data in it. We're going to make this thickness 50 and then 25 meter steps. Okay, we're going to now turn this up. So I basically sliced horizontally through the deposit, and we're going to look straight down on this puppy. Okay, now why? Well, I want to show you some things that are really intriguing as you go deeper. Like, where did this gold come from? You know, this stuff didn't come here by magic. It came out of structures or feeders coming from depth, most likely. Okay, well, where are they? In other words, what's open at depth? All right, we're going to go down now. So as I step through this, step, you can see the pinks and the reds. The pinks are the high grade, obviously, and the reds are slightly lower grade, and then the yellows are lower grade still. But as I go downwards, you can see what happens. Like, it's like looking at the roots of a tooth. Okay, where's this thing going? Well, interesting. Okay, the gravity sort of shifts. I mean, the center of mass of the system kind of steps a bit to the southwest as we go down. Okay, as I slice deeper and deeper. Now, one thing I'm going to point out, as you go down, all of a sudden you see some high grade, like real high grade. There's a 32 gram sample there. There's a 16 grammer over here. 9 gram, that's not bad. There's a 26er over there. I can't read the numbers in there, but there's some high grades there. My point is that as you go deeper in this thing, as we slice deeper and deeper, we're starting to see some high grades. So I'm toggling back and forth, but we're seeing some high grades pop up at depth. They're manifest as veins, okay, which is really interesting. But notice as we get deeper, first of all, a lot of the holes disappear. Why did they disappear? Because they didn't go down this deep. We're getting down into the roots of the system. And we're seeing a lot of double-digit assays. Look at all these double-digit assays here. That's crazy. There's something going on at depth. I'm telling you, there's something going on at depth. Maybe there's a root over here. I don't know, but there's also something over here. And at some point, I think it's going to behoove the company to chase the high grade at depth. Now, here's something that just caught my attention. I was playing around with this morning. That is your highest assay, 154 grams per ton gold. Okay, imagine if that is our little feeder down there, just hiding in plain sight. And look, there's hardly any drilling. Like, there's one hole here, but there's no other drilling around this puppy. Okay, there's something going on here, guys. I'm telling you, like, there is a feeder or something happening down deep that fed. Now I'm going to turn this off. This, okay? So something down in here is probably tapping fluids from a different source deeper in the ground and let those come up and inform this gigantic cloud we call valley. Interesting thought. Okay, so I hope I'm going to leave you with that. I don't know where it's going to go. They're going to have to do more drilling, obviously. But sometimes deposits like this, especially when you get in these mega deposits, they can really do crazy things. You can start to find more and more and more. All right. Okay, back to the script. Okay. Go to the next target or slide. Okay, they did a little bit of drilling at Jupiter this year. They really didn't drill that many holes, but they drilled enough holes they could test some concepts around where the high grade that they hit, I think 3 years ago, now extends. Remember, they had to clean up the land position here, the ownership structure and stuff. They came back in. I think they drilled 6 or 8 holes at Jupiter, and one of the highest grade intercepts they've had from this year is actually on this cross section. Okay, it's this guy right here, which is hole 31. So it's, if you look in the upper right, there's a drill hole number 3. Yeah, 3 or yeah, I can't read it. Something -24-31. Okay, way down there at the bottom of that is 9.4 meters of almost 7 grams. And inside of that, there's a 20-gram assay. That's one of the highest grade assays they've seen on the property. And what really intrigues me about this is that the style of mineralization in that drill intercept looks like something we're all familiar with. Go to the next slide. It looks like Newfound type material. Okay, so basically they hit a nice white quartz carbonate vein, and there is visible gold in there, associated usually around the margins of the vein, associated with these little black stringers, these selvages of argillite and stuff. Look, that is in every respect that is a Newfound style of mineralization. What I mean by that is it appears to be an epizonal gold, like a bona fide epizonal gold intercept. Now, wouldn't it be crazy is if they were at the top of the system at Jupiter, and as they go down, they kind of find the high-grade mothership hiding in there. Now, they didn't do enough work this year to kind of confirm that, like give us, definitive proof. But little snippets like this, when you see this style of mineralization pop up, you got to take note. I think they're onto something very, very interesting. Okay, so good news out of Snowline. Go to the next slide. This is going to be painful, guys, because there's a lot of news. Okay. All right. Goliath had 2 news releases in my absence. One was a news release, I think 2 weeks ago, about gold associated with an intrusive feeder. Okay. Now, we've recognized recently that there are reduced intrusives here at Sherbet. They're not the same belt. This is not the Tintina belt. This is way down in the Golden Triangle. So it's way off to the south of the Tintina region. But nonetheless, the chemistry of the magma that probably generated the deposit at Sherbet appears to have some affinity with reduced intrusive. All right, so what did they see? Well, they intercepted this 12-gram intercept over 10 meters in a drill hole that was drilled a while back. I think I might have mentioned this briefly, but basically they were in a rush. They didn't assay the entire hole. This is an old hole. It's like 2 years old. They went back, they re-assayed, and they kind of, their eyes wide open. They went back in and resampled areas of core where they hadn't had numbers. Okay, and they hit bigly. This is really, really interesting. First of all, it does provide us a very kind of concrete evidence that there is a reduced intrusive associated with gold mineralization at Sherbet. That's really interesting, but it also potentially is an interesting target, like in its own right. Okay, so this is good news. Go to the next slide. This simply shows some of the core there. We can't zoom in and look at the core, but basically the textures of that core are porphyritic reduced intrusive, much like we see at Snowline, at Valley, for example. So, it's the same. It's got the same flavor, and the little light patches in there, those are centered by quartz veins, sheeted quartz veins, and that's where the gold occurs. The gold occurs in the quartz veins, usually with the bismuth and tellurium, just like we see at Snowline. Very interesting stuff. So that's good news. Go to the next slide. And then they had another news release. I think this was earlier this week. It was nearly 11 grams gold equivalent over 10 meters. And this is out of a drill hole that hit multiple loads. Okay, as it went down, as these things are relatively flat loads. So as they went down, they actually hit a number of intervals. But this is the one interval out of hole. Doesn't say the name of the hole. Anyway, out of the Sherbet zone. All right. Now they have a lot of holes coming back yet, so we have lots more news, but let's look at this a little closer. Go to the next slide. Okay, here you can see the core from this interval. I've talked repeatedly about the nature of this mineralization. It's kind of a stockwork shear zones that are relatively flat. The width of this is substantial, 10 meters, plenty of width for mining. I mean, that's delightful. It should be a really nice deposit to model and then hopefully mine one day. Notice they hit multiple loads, not only this one in the Sherbet, but they hit some high grade in the Bonanza. I think there's 2 intercepts in the Bonanza zone, including, these are terrible, something, I think it's 6 grams over 5 meters or something like that. I can't read it quite, but again, it's kind of the baklava model. Okay, they've got a stack of loads here. I think this is really interesting. Go to the next slide. And they've also started to put some diagrams together. They're very illustrative about what they're hitting. Okay, so this little snippet that I clipped out of the news release shows a sectional view. It's kind of north-southish through the system, and the different colored loads. There's the yellow ones, and then there's the purple or blue ones down there. Those are the different ledges or loads of gold mineralization they've encountered. Sherbet is one of the uppermost one, but then you go down into the Bonanza and such below. Okay, this hole 247 is one of the holes in this most recent release. It's kind of, the flag for it is kind of right there in the center of the image. And notice it hit 13 grams gold equivalent over 7.95 meters. Again, plenty of thickness there, real robust intercept. This should make a great mine. Okay, but that gives you a very clear picture of what they're dealing with. I'll tell you what, I'm going to go to the 3D model for just a jiffy. I won't take too long on this one because we've seen it multiple times, but I'll give people at least a sense of what. There we go, Goliath, of where these holes are. You can see this, right?
Yes.
Okay. All right. Now, one of the things I'll do at the beginning here, I'm gonna turn topography on for just a jiffy. It's a very, very dense model. In other words, the topography, which takes a little while to actually load here, is a huge part of this model, and it slows my computer down. So I don't want to bore people, but just the extent of the gold system is jaw dropping. Okay, look at the scale bar down here. This is a scale bar that kind of shifts as I zoom in and out. That's a kilometer right now. So basically, this footprint of gold mineralization underneath this mountain is, say, a kilometer this way by at least a kilometer north-south, but it's also vertically about a kilometer tall. Okay, this is a huge, huge volume of rock. In other words, with respect to many gold systems, this thing just has the feel of a very, very large gold system. All right, now as I turn this around, you can start to see things line up. Okay, for example, these intercepts here are the Sherbet zone. Okay, so that's your Sherbet zone. Yes, it wobbles up and down a little bit, but generally you can hold your mouth just right and you can kind of see them all hang together there. And then down here, if I turn this about like so, you can kind of see the Bonanza ledge take shape right through here. Okay, lots of room to grow though. They have intercepts like, look at this guy, this right here, 263. It's a one-off intercept. What does that grade? It grades 12.5 grams, but there's no drilling around it. Okay, there's absolutely no drilling down in this area. So in other words, if the Bonanza ledge comes along, this confirms it, great, but there's a lot of room down here to expand things. And that's what I want to emphasize to people is that this deposit is in no way, shape, or form closed off, in my view. When you see high-grade hits, like, for Pete's sakes, I mean, look at this. There's a high-grade hit way the heck out here. Look at that guy right there. Like, what's that doing there? Okay, don't know, but that's a 57-gram sample, and it's way over there. Like, that's 1.5 kilometers from where the rest of these drill holes are. Anyway, that's usually the sign of a big gold system. I can't wait to see the company drill aggressively. I think they're already talking about a pretty big program for this coming season, and this deposit easily justifies that. All right. Okay, let's go to the next slide. All right, Eloro. They've been doing infill drilling down in the kind of the core high grade area at Iska, and they've found that there's really two, like, differentiated into two systems here. You have the tin system, which is predominantly to the west, but then they have the silver lead zinc system, which is more to the east. And both of these in their own right are really impressive deposits. I think they have a lot of, they basically have two deposits sitting right next to each other. But this week they intercepted or announced intercepts of nice tin mineralization, nearly 50 meters of a little over 0.5% tin. You know, for context, tin trades about 3.5 times the price of copper. Okay, so, you know, you can imagine, like, in copper numbers, you know, multiply that by 3 or you're 3.5 or whatever, you're almost 2% copper or something. Okay, that's the way you should think about it. That's very impressive. Those are really impressive numbers. And that's within 91 meters of 0.34% tin. So once again, very impressive. Now, there's a bunch of bullets there, and I didn't realize how small the text is. I wish I didn't have to cut and paste stuff verbatim, but whatever. Look, I'm going to summarize because I read these, and I'll just, from memory here, I can't read the darn things. The notion is this, okay? In this part of Bolivia, a lot of the lead, zinc, silver systems are actually driven by tin porphyries, all right? So the lead, zinc, silver is kind of a big halo, if you will, that's associated with tin porphyry, often either to the side or below the lead, zinc, silver system. Okay, and what they're saying in this news release, in these bullets, is that they think they see, with these intercepts of tin, they think they see an apophyse, a finger, you know, a nipple, cow udder, remember, of tin poking its nose up right here in the middle of the lead zinc system, or lead zinc silver system. Yeah, this is very interesting. Now, I'm going to go to the 3D model. I think it's really good to do a refresh in people's minds about this story in particular, because when you see the scale of it, it's just big. It's huge. Yeah, hopefully you can see that, right? You see it? Uh-oh.
No, we're looking at, well, now we do. Yeah.
Yeah, you do? Okay, cool. All right, sorry. Little bit of a lag here. Okay, this is the plan view out of their news release. It shows their main target area, which is this red oval. That's where their high-grade core is. But the resource they announced, like, when was it? About a year and a bit ago, a year and a half ago, is this bigger guy, this black circle here. Now, I'm going to turn this imagery off because it gets in the way of the drill holes. But you can see right away that, well, first of all, you can see the mineralization is in all of these holes. I've never seen a system where, you know, you're talking like 2-3 kilometers away from it, you're still in mineralization. Look at the scale. That's 2 kilometers. And they've got holes way the heck down here that are still in mineralization. You know, okay, yes, this big blob here generated a gigantic volume. I think it was like 600 or 700 million tons in that initial resource. But as we know, it came back kind of low grade. Why did it come back low grade? Because if we zoom in, you can see that I think the computer treated this fairly unfairly by kind of smearing out a lot of these shorter high grade intervals and taking in a lot of the void between. In other words, basically the model kind of blew out in terms of grabbing a lot of no grade. Okay, but the company is doing the right thing now, and they're drilling in this core area right here to try to infill and get enough data that they can build a respectable resource, higher grade resource that I think will justify building building the mine, quite frankly. Okay, so we're going to cut a section through here just to take a quick look at this, about like so. Let me turn my slicing plane. Where is it? We're going to make the thickness. I'm going to make it thick because this is a big deposit. Do that. 50-meter steps. Boom. Okay. First thing that catches your eye is that the continuity in this high grade area is pretty good. Okay, nice long intervals without disruption. And in other words, most of the material, and this is right below surface, most of this material is basically ore. Okay. I think that's really encouraging. As we step in and out of this thing, as we zoom in and out, you can see it still holds together really, really well. They probably need a little bit more drilling in this area, but look at these long runs. You know, there's a lot of nice intercepts in there that hold together. You say, well, gee, you know, how about this area out here? There's some nice runs. Yeah, but that's going to be a tomorrow problem. Right now, they're focused on this area. Okay, this is their core area. I'm going to make a prediction. I think if they can come back with, say, you know, 150, maybe million tons, maybe 180, I don't know, in this core area of higher grade material, I think that would make a delightful case for a mine. Okay, so does it mean the rest of this stuff, if I zoom back out and we turn this off, does it mean the rest of this stuff, like up here and down here, isn't ultimately mined? No. It just goes back to what I've said repeatedly about ore deposits, is sometimes you got to kind of start in your best area, kind of work the economics around that, and then, you know, with the full recognition that you're going to ultimately likely going to mine this stuff out here and maybe this stuff over here, but that's going to be in the, you know, 30, 40 years from now, whatever. Yeah, but this will make a great mine in the meantime. All right, so we know this is a huge deposit, great high grade starter area, and they're infilling, and I think we should see some really, really nice results. All right, back to the deck. Now I'm going to put my skates on. All right, go to the next side. I think I've done with the models now. Electrum, they announced some interesting news. It kind of popped out of the blue. I did talk to the company after. But they did some what are called audio magnetotelluric surveys across their Bambino target area. This is the East Timok region or property. And this audio magnetotellurics is it's basically an electrical technique to look at the way rock behaves in the ground. It looks at the conductivity and the resistivity, like how well electricity passes through the ground. Let's go to the next slide. Now, the area they did it, see the little polka dots up there? Those are the stations where the data was gathered. So I think there were 14 stations scattered across that target area. The colors that you see in the background, those are simply lithologies. They're layers of rock. The blue is a limestone, for example, but the greens and grays are volcanic rocks, part of the volcanic R complex that's here. And that bright orange and stuff, that's the copper anomaly at Bambino. Okay, so what did they see? Well, we're going to zoom in now and look at the three. So there's three little green lines right there in the core. We're going to look at this MT data. I'm sorry, it's a black line. It's a black line. So we're going to look at what the MT data found. Let's go to the next slide. These are three sections through that MT data. They start up in the northwest. So the top section is in the northwest, and we're stepping southward as we go. And what you can see here is that there is a big blue blob down deep. It's pretty darn deep. It's like 1.5 kilometers down, but that is a resistive feature that's at depth. What it is up for interpretation, but the company thinks that is a mass of intrusive rock. Okay. Now, what does it mean? Well, that could be a porphyry. Could be. Now, why is there a big red shell, like almost like a rainbow, going across the top of it? That's more conductive rock. Okay, the reds and the pinks are more conductive rock type, probably because they have a bit of sulfide or something in them, maybe that allows electricity to more easily pass through them. And that might be the shell wrapping around the porphyry. Now, we know from the name at the top that the Bambino target is more or less top center on these images. In fact, that Bambino central in the middle shows you where the drill holes are. The drill holes, even though they're like 250 or 300 meters long, they barely prick the surface up there. So if you zoom way in on that middle image, you'll see the drill holes that they completed are kind of up above that conductive zone. You know, could they have drilled deeper? Yeah, but this company didn't have a heap of money to play with. Okay, so they drilled what they could. And now they've stepped back and they're going to think about it again with this data in hand now about whether they come back and try to drill the deeper conductive features. I would like to see other data that they gather, particularly across a bigger region, to see if we can't tie this target, like contextually tie it to the rest of the TMOC area. I think the 2 holes that they drilled, it sounds like they hit sulfide in places. Did they hit a world-class ore body? Doesn't read like it that they did, but it sounds like they hit a lot of skarn, which is cooked up rock, again, thermally cooked up rock that would be found around an intrusive. So maybe there's justification. Like sometimes you got to step back, evaluate your data, especially get the assays back from these holes, see what it tells you, and then come back at it again. At least now they do have some more data, though, that tells them there's some deeper targets there, maybe a little bit to the east as well. But there might be a reason to come back and give her another go. They do have support from BHP, which is a good thing. I think they got plenty of money to, in terms of, ability to do this kind of technical analysis. But they wanted to save their powder for future drilling. So that's where we're at there. No home run, but interesting data. Let's go. Next. There we go. Sitka, they announced the start of their 30,000 meter drill program for this year. They're drilling in winter, which, in the Yukon is manageable if you have road access. They do have road access here, which is good. And they'll probably drill a few holes. I wouldn't just say they're going to go, pell-mell in the wintertime. They might drill a few holes, say between now and April or May. But then as the summer comes around, May, June, July, August, they'll be able to, really ramp up and hit this 30,000 meter target, I think. All right, let's go to the next slide. And just as a refresh, look, I talked about this a couple of weeks ago. This is how they're allocating their drilling across the property. Okay, so about half of it goes to the current deposits, Blackjack and Eiger. Hopefully they start to see a connection between the two. And then the next target is Pulkaman, which is an intrusive about 2.5 kilometers due south of Blackjack. They're going to drill about 5,000 meters there. And then Rosgobble, they're actually going to allocate 10,000 meters. Rosgobble has a really, really broad footprint of historical holes that had really nice grades. And they did have some nice drill results out of there with a couple of deeper holes you can see on the image late 2024. Okay, so good program. I do hope they are a little, like, maybe use 20% of their drilling to kind of test some areas in between, just to see how things start to connect. Like, how do you connect all these intrusions together? Because there's something big here, something real big. I'm going to try to get up there this year. I'm going to try to get up maybe in late June or early July or something like that. I want to be there while they're drilling. I want to see, for myself, the lay of the land. And I want to see some of the things that make the higher grade come together. Like, why is there high grade at Blackjack? There's something more going on here. All right, let's go to the next slide. Okay, Newfound has really been building up their team recently, and it's mainly with development, people who are geared towards development. Paul Hewitt joined as chairman a few weeks ago. I think maybe it was late last year. I can't remember. And then Keith Boyle is now the CEO. And Keith is a development guy. I think he's going to put this on a path towards development. You can see there's been a number of changes, a number of people brought in, most of whom are geared towards the engineering side and the construction side of projects and permitting as well. Okay, so this is a big step. That's that Lassonde curve. You go up, you peak, you come down, but then we're down here, and maybe this is the time where she goes up again as they go into development. So it might be really good timing for Newfound. Let's go to the next slide. Mogotes. Okay, look, I've never seen a company work so hard to clean up a land position and really get themselves well positioned for discovery. But they know they have the goods. Okay, geologically, this one is a pretty easy story to understand. And the fact that they've gone out of their way to acquire new ground, especially this key piece of land that's kind of due south and on strike from Filo, but then also clean up the earn-in that they have on the Argentinian ground, I think is great, because it means any discovery that's made from here, they got 100% exposure to. It's not like people are going to go, they got to do an earn-in and, all these complications. No, now they own everything 100%. They got a clear path to unlock value as they make discovery. and they are working down there. Okay, they kind of slow walked it a little bit here for the past 2 or 3 months as they got these land deals done. But now that these are out of the way, their most recent news release, which is on the 18th, is about starting exploration on that new ground. All right, let's go to the next slide. Okay, so this first image is really just showing you where they've converted the Argentinian Golden Arrow earn-in deal that they had into 100% ownership. Wonderful outcome. That means discoveries that are made there will just add value to Mogotes. Yes, Golden Arrow is going to get some shares in Mogotes, but you know what? They're going to be equally incentivized to see the company succeed as we are as shareholders. All right, so I think that's a good thing. Now, they picked up that newer ground, which is in the darker colors there, a little bit darker teal blue. And notice that it's right on strike. It's basically in the middle Miocene porphyry belt that's defined in this area. And it's due south of the Philo area. And in particular, it's a drill hole that was announced not too long ago, probably within the past 3 or 4 weeks. There was a 610-meter intercept, 0.39 gram per ton gold. Not huge, but, it's significant. And then 0.15% copper. What is this? Well, I'm going to talk a little bit about this. They've got some interesting illustrations in their news releases. Mogotes does that I think will inspire people to think about what might potentially be hosted on Mogotes ground. Okay, go to the next slide. And these are very technical news releases, guys. Like I work with Steve Nano, and these read like our monthly report from exploration at Newcrest. These are intense. They're dense data. But I'm going to pick it apart and kind of spoon feed it to everyone here. What do they see on this new ground? Well, what they're trying to say is they see evidence that they're at a very high level above a likely porphyry center on this new ground. Okay, the alteration, the smuggy silica and so forth, this is basically the high sulfidation part of a system. So it's a lithocap above what hopefully is a continuation of the porphyries they see at Philo. Maybe there's even a new porphyry down here. Okay, let's go to the next slide. All right, this map on the left shows at a district scale the trend of mineralization. The yellow kind of elongate thing, that's the perceived mid-Miocene porphyry belt. And these guys have a lot of the porphyry potential down at the south end. That white box is the newly acquired ground. And although the belt jogs as it gets close to that big northwest trending fault, there is a pretty substantial piece of ground right in there, combined with their already existing ground, that covers basically the entire southern end of this belt. If you go over to the right, you can see a zoom in on that area. It's got a lot of colors and stuff. Look, the colors are simply telling us what kind of alteration and stuff the company sees there. And they're trying to say they see the same type of rocks and alteration that they see up at Philo immediately to the north. So that black line, it's kind of black or dark purple or something with dashes. That's showing you where they think the sweet spot is. They think that trend right through there has the same alteration, basically a continuation of the Philo system onto their ground. All right, let's go to the next slide. Now, this image, the one on the top goes north and south along that belt, okay? And what we're seeing here are assays over here on the right-hand side. Those are the Philo, I think it's the Aurora deposit, assays. So those are drill holes, and you can see where the higher grade material is. And you can see the porphyry is an unusual shape. It's like an elongate, knife or something. Like it comes up close to the surface there, towards the middle of that image. Right, so it's plunging to the north, but it comes up and it actually comes to surface right around the middle of the image. All right, now that hole that I mentioned earlier is that red one that's highlighted there. It's actually labeled. I can't read it or anything, but it's highlighted there, and it shows up as red too. Like in terms of copper equivalent or gold equivalent, however they present this, it's a pretty good hole. But notice there's a hole immediately to the left of that where it's got green up top, so low grade. Then it goes into yellows and oranges. Notice there's a red down at the bottom. That's interesting. Okay, that's a hole on the phyllo side. Now, as you go along, as soon as the color starts, okay, that's Mogotes ground. Now, what is the color? Well, that's a resistivity image, I believe it is. I'm pretty sure that is. That shows us there is a big saucer blob of anomalous rock in the subsurface. There's a gap where the new ground is. So where the white is with the two red arrows pointing like this, they need to collect more data in that area, and they're doing that. They're going to do the geophysics in there to fill in that gap. What I think is going on is you have basically two porphyry deposits, like the one over here, this Aurora deposit is plunging to the north like that, and then there's another one tucked underneath it that appears to be showing up on the Mogotes ground to the south, and we can kind of see a little snippet of that with that one drill hole that has some red right at the end. I think that just got into that second lower porphyry. Now, fortunately, that geophysical anomaly sits relatively close to surface on the Mogotes ground. The image below that is an east-west section through there, and it shows that cohesive blob. It's kind of like a thing of like looking along the axis of a sausage or something. That is the target, okay? I'm very anxious to see these guys drill it, because if they find another Aurora-type porphyry right next to Aurora, this thing will not just knock it out of the park. I think this could be one of the best drill stories this year, hopefully. All right, so that's the compelling data that I see. Let's go to the next slide. Condor. Okay, I have got to apologize. I was actually traveling, and this news came out while I was traveling, and I forgot to put it in the last update. Darn it, it feels bad that I didn't announce it back then, but I still have a shot. Okay, so Ever texted me one day while I'm traveling. He says, "Oh, I found a report from Vale. They did some drilling on one of the properties that Condor has. It's called Rio Bravo." He says there's some really big intercepts of copper in this data. I'm like, holy cow! Send me more. So look at the three holes that are there. Holes 1, 6, and 8, I believe there. 220 meters of 0.51% copper equivalent, 324 0.47, 312 of 0.54 copper equivalent. These are good numbers. Now, where is this? What is this? Well, this Rio Bravo property is actually not far from Lima, and it's at the north end of what we call the Southern Peruvian Copper Belt. Okay, there are different belts of copper porphyries that kind of follow the Andean arc up and down South America. And in southern Peru, there's a particular belt that has a certain flavor, we'll call it. Okay, and it's copper with a little bit of moly flavor. It's a very distinct combination of metals. There's no gold in these things, again, none, zero gold, but there's copper and moly, like half pound to a pound moly. What deposits can I throw at you that are like this? Okay, well, Cerro Verde, like there are big deposits. You got to take my word. There are billions of ton deposits in southern Peru, going on down into northern Chile, that have this kind of flavor. And I talked to Ever about this. He said, look, Vale drilled this. They had some community issues, mainly because they didn't meet certain expectations. I think they were taking their time drilling. The community wanted them to go faster. Ever is working his tail off trying to get a better community relation going, because this is a great target. He thinks it could be one of these kind of unicorn mega, southern Peruvian copper belt type porphyries. It's got the same kind of grades, 0.3x% copper, and then that moly component. This is a really interesting target. It adds to their already impressive collection of properties. Go to the next slide. There's a couple of slides here. I'll just show you. This is Ever's interpretation based on rock chip sampling he's done of where the copper center is. Yeah, there's a higher density of samples, surface samples, on the left-hand side of the west side of that red oval. But notice there's some high-grade copper samples on the east side. It just doesn't have as much density of sampling there. And Ever actually thinks, based on the alteration, he thinks it's under that east side that the porphyry is sitting. Go to the next slide. So he drew a section through here, and he shows what he thinks is going on in conceptual terms. First of all, he thinks that the volley drill holes were drilled kind of off on the western periphery of this porphyry copper moly system. And based on the alteration Ever sees at surface, which you can read the labels in there. I can't read them. But that kind of gray and pinkish gray stuff, that is the alteration that one would expect over the top of a copper moly porphyry core, the mothership. So he wants to come in and drill holes a bit to the east, test a little bit deeper as well, and see if we can't find one of these mega, porphyries that we see down in this part of the world. It would be an absolute remarkable outcome. But I think it's quite exciting, to find historical data like this and then really put together a target that's just compelling. I think it's absolutely wonderful. All right, go to the next slide. Oh, I was a director. Sorry, forgot to disclose that. I'm a director. Yeah, you don't have to go back. Just make sure it's in there. Okay, Hannan Metals. I love this company. I love the story because they're exploring in new areas on the east side of the Andes in Peru. They're exploring a new belt of Miocene Miocene porphyries. And this Valiente project is a very large landholding they have in the east side of the Andes. It's down in the lower elevations where there's a lot of kind of tropical environment. So it's a pretty wet and humid environment. It's not like high Andes or something. It's tough vegetation and stuff. But they have these exceptional targets. Now they're going to drill this Belen target first. Okay, this is where they've got a permit that's making steady progress. They have to do a little bit more work, and they have to get their archaeological monitoring program in place or approved, and then this deforestation authorization, and then they have to get a drill contractor, obviously. But I would say they're on track to probably start drilling this thing in the second quarter, and I think this could, like I suggested for Sitka and some of these other stories I'm telling you, this is one of the more exciting drill stories I think this year. Now, this is not Previsto, okay, just to emphasize that. Previsto is in the works. It's another center, but it's more of an alkaline gold center, and I'm very excited about that one as well. But let's talk a little bit more about this. Go to the next slide. Show you where it's at. So on the left-hand side here, you can see the Valiente project. The yellow box there, this Belen target is the one in the lower, like the southwest quadrant of that claim block. Previsto, the one I'm really super excited about, is up in the north end. That's going to come probably in 12 to 18 months. Got to be patient there. But in the meantime, we have a lot to look forward to. Okay, the image over here on the right shows you 3 robust porphyry targets. They have not only great surface geochemistry, they got good geophysical data to define a series of targets in these 3 porphyries. The image is rotated, so north is actually kind of to the left in this image, but they're going to drill those starting in the second quarter. So that's what this news release is about. They're telling the market, hey, we're going to be drilling soon. This is the time to invest. All right, go to the next slide. Okay, Eskay put out some news about what they would like to do this year. I helped Mac. Again, I'm a director. I helped Mac put this news release together because we had some really intriguing results come late in 2024 from some prospecting work in a new area on the consolidated Eskay property. It was down in a region at the south end of the property. Actually, go to the next slide. I think the image shows it. Okay, it was down, see, way down there at the south end. We had some really high-grade results come back late last year in an area called C10 and Vermilion, as well as this TM. It's a Ted Morris zone. What is it? Well, look, 3 or 4 years ago, we did a BLEG program across the property. In this area down here, the streams just lit up like something I've never seen before, telling me that there was a good chance there was going to be a gold discovery in this southern part of the property. We were focused like a laser for 2.5 or 3 years on the VMS up at TV extension. Don't get me wrong, I still think that VMS is a great target and stuff, but we never explained what that gold was coming from down there in the south until we had the prospectors come out last year. And I met the prospectors at Roundup, the two young kids who went up there. I should call them kids. They're probably 40 years old, but whatever. They went up and they were the ones that took the rock chip samples here. Absolutely stellar results. Okay. And who are these guys? They're part of Kenny Conkin's team. Kenny is the guy that found Bruce Jack. Okay. So these guys know this country. Bruce Jack, by the way, is an operating mine now belonging to Newmont. It's just off the east edge of this image, like literally just off the east edge. So just due east of C10 Vermilion in the TM zone. If you go over here, just off the image is the Bruce Jack mine. It's a mega producer for Newmont, tier 1 asset, very high grade. And I talked to Kenny Conkin. I had dinner with Kenny Conkin and his two GOs. I don't know if they want their names out there or not, but anyway, really intriguing dinner. I said, what do you guys think about this stuff? I said, what did you see at Bruce Jack in the early days? Well, a few quartz veins, a few high-grade quartz veins. I was like, really? Is that right? I thought maybe there was a bit more, no, that was it. That they saw high-grade quartz veins. Okay, so do you think there could be something like that here? Yeah, yep. Well, that's kind of intriguing. I'm not making any promises, but those guys feel that these high-grade results that they achieved last summer are more than a little interesting, and they want to come back and work for us. Okay, so they're actually Kenny's lent his geologist to us for a bit, and we're going to follow up on this. Okay, go to the next slide. There's some numbers, and I'll just leave this image with you. Look at the values that we saw out of the first pass rock chip sampling across these two target areas. Ounce or ounces of gold per ton type stuff in many samples. Yeah, this is crazy stuff. This is what you need to follow up on. When you find this and you can see that the legs are telling you there's something big here, you better pay attention. And we're going to do the work this year. We're going to, and look, the stock's been beat up, but maybe this is where you kind of get a second win and you make that new big discovery of some sort, So we're going to give her heck this year. Got money in the bank to follow up on this work. Might even be able to do some drilling if they define drill targets by the end of the summer. All right, let's go to the next slide. Silver 47. Look, anytime a company starts talking about critical metals, I get a little squeamish. I got to be blunt. Okay, I like silver, gold, lead, zinc, stuff that I can wrap my mind around. And when you start talking about gallium and antimony and germanium and stuff like that, it's like, well, okay, it's interesting, but the smelters usually capture those metal, and you never see any value out of it. But whatever. But I will tell you one thing. Okay, I will tell you this: the fact that we have very high antimony and gallium in these intercepts that have been drilled at Red Mountain, is really important for a good reason. In my experience, and I've worked on a lot of VMS systems in my career. I did both my master's and PhD on VMS. When I see a lot of exotic metals in a VMS deposit or district, when I see a lot of the exotic transition elements that are on the periodic table show up in a VMS deposit, in a VMS system, those are usually the winners. Okay. Why? Because that means the system was long-lived, strong, chemically strong. It was able to move a lot of metal around. So I think the fact that we see high antimony and gallium and such in this is really a good sign that we're onto a big VMS district. I've thought this from day one, even when we were invested in White Rock years ago, that this is a world-class, call it like a Greens Creek type VMS camp or deposit. All right, let's go to the next slide. I think we're getting there. Lion 1. Okay, Lion 1 has been drilling infill holes, mainly around the mine area. But now they've stepped out and they've done a lot of infill, very tightly spaced infill holes around the west zone. Okay, now the image, you can see the numbers over. They're very impressive numbers, as always. almost 200 gram per ton over 1.4 meter. Over on in the upper right on the image, which is split there, you got an image on the left that has the kind of in light shading the loads and the underground workings that are presently there in red. And you can see they're a ways from this area that they're drilling in the west zone. Okay, but the fact is, if you go down to the image in the middle, in the bottom, the west zone is basically right underneath the mine infrastructure. So the mill and other infrastructure is sitting right adjacent to this west zone. Okay, the company talks in their news release about potentially putting a second decline down into this area. Might happen. I think the reason they're drilling this like they are is because they recognize this is low-hanging fruit that's relatively close to the mill, and it can be perhaps brought forward in the ultimate mine plan. Okay, so interesting, good news there. Okay, if that might be it, go to the next slide. Oh, I forgot. Okay, us Americans have got to bow to our Canadian brothers. Yes, it was a good hockey game. I was flying at the time, so I didn't get to see it. But first thing in the morning, I'm just having Canadians beat me upside the head with how wonderful their hockey team is. And I got to say, from my vantage, I like to see a little more Canadian in our Canadians lately. Okay, what does that mean? Like I remember Canada from years ago, and I'm talking like Bachman Turner Overdrive Canada. Okay, and we're seeing a little bit of that come back, and that's a good thing in my view. So, right on. Congratulations. All right, that's it.
Kevin, on you. You muted. No problem.
Sorry about that. Hey guys. All right. So thank you, Quinton. Anyone who is interested in learning more about our strategies, our funds, we encourage you to reach out to Merrick. Take note of his phone number and his email address right here on the screen now. Please do follow us on YouTube and on Twitter. Go to our website. We got a letter out there that we wrote about the unsustainable disequilibrium. I encourage you to go read that. We're working on a new research letter that Tavi's heading up that will be out here, before the end of the month. And we are really excited about the opportunities in the market right now. Crescat has had somewhat of a contrarian and value-oriented. I can't help it. It's in my DNA. Bias over the past couple of years that as this momentum market and the mega cap tech stocks has had all the leadership. It's something that we've not been interested in chasing. In fact, we have some contrarian views as that we expressed at the beginning, and think there's some incredible opportunities on the short side of the market. I think the days of the popularity of passive index investing are in the ninth inning, and I think there's going to be some big changes in the years to come. It's time for fundamental analysis and value investing to have a resurgence. I really believe that, and that's how we're focused. And so if you want to learn more, come to our website, read some of our materials, give us a call. We're happy to set up a one-on-one call with you, and we can talk more about it. So that's all I have for today. Tavi, any concluding comments from you?
No concluding comments. Well, hope everybody enjoyed the show. We'll be heading to PDAC next week to meet with some of the companies that we are investors of, and hopefully get more information about what's been happening, more updates on them in general. So thanks everybody for watching. Again, if you enjoyed this video and also would like to know more about Crescat, the information is on your screen. Contact Merrick if you are interested. Thanks everyone, and we'll be back soon. Take care.